Welcome back folks to a top-down analysis. First of all, I want to thank you all for the support given to the last video. Thank you so much. On this video we will be covering the trade executed on the last video, the setups that I used to frame the trade and what did I use in order to get into the trade. Plus some more setups that could have been taken that day. Well, the trade was mainly framed by this concept, the TGIF, thanks God it's Friday. This is a setup that usually shows up after a weekly expansion. Basically we look for a retracement of the 20 to 30% of the weekly candles range. We get this levels using the Fibonacci tool from the high to the low of the weekly candle. Besides, I always implement this when I'm trading the morning session. This is the opening range gap, which is the difference in between yesterday's close and today's opening price at 9:30 a.m. New York local time. To be able to see this you have to put your trading view chart to regular trading hours instead of electronic trading hours. Price will usually look to fill this gap or it's 50% at least. You do not have to believe me, go look at it on your own charts and you will see it. And lastly there is the concept that I used to get into the trade. A fair value gap. I think that you all know already how they work, but I will explain it, just in case. This is a 3-candlestick pattern that shows a gap in between the candle's wicks as you can see on the graph. Price will fill this gap and continue going higher if our bias is right. Now let's start breaking down the trade, starting from the weekly chart. As you can see, after having a green weekly candle, we retraced right into the 30% of the candle's range on a Friday. Showing us the power of the TGIF setup, which is used to get a bias for Fridays. Hourly chart. I used this time frame to look for liquidity pools. And I found a sell-side liquidity pool that was rated on the New York morning session, providing us the low of the day. The orange shaded area is a daily imbalance, that is also a reason to expect price to retrace. So we are adding confluences, we have the TGIF, the daily imbalance and a sell-side liquidity pool, we already have 3 things suggesting that we could move lower. 15-minute chart. Well, here we get an old new week opening gap in play. As you can see, price respected to the new week opening gap high and it respected its consequent encroachment with the bodies, so this is also suggesting a move lower. Plus we had a bullish Judas swing at the open that rated some buy-side liquidity. Everything was looking good for a short. 5-minute chart. Well, on this chart I noted the midnight opening price, which was really close to the sell-side liquidity pool that we had noted on the hourly chart. Another confluence to move lower. The blue shaded area is the buy side of the curve of the market maker sell model, which was the Judas swing. As you can see, it used a FVG to move higher. Then, the red shaded R is the sell side of the curve, where we executed our trades. This is the opening range gap seen from the 5-minute chart. And I also framed a new sell-side liquidity pool which was the PM session lows from the previous day. You can add up how many confluences were suggesting to move lower, it was a clear day for shorts. 1-minute chart. Here I have the chart showing you the buy-side and sell-side curve of the model, with the opening range gap levels, which were almost the same as TGIF levels, that is why I did not note them. I want you to pause the video and look for entries that you would have taken knowing everything that we have discussed on the video so far. Let's start. Take into account that the displacement lower started at the 950 to 1010 macro, this is another confluence. After the market structure shift lower I went short when price visited the inversion fair value gap and the 2022 model fair value gap. We can use bullish PD arrays on the buy side of the curve as an inversion PD array when we are on the sell side of the curve, as you can see. So this is our first possible entry. Then we had another inversion fair value gap coupled with 2 fair value gaps, more confluences lower. And we were already into the TGIF levels and into the opening range gap. Things looked too clear for shorts. This is what it looked like when I executed this trade. As you may guess, I could have held lower into the sell-side liquidity pool, but I was content with the result. Now I will give you some possible setups with the proper risk management that I would have used for this day as a beginner. This is the naked chart. I will start from the top to the bottom. Take into account that every trade that I'm going to show is also a silver bullet trade. This is the easiest one and the most safer one to take, since we are shorting from a deep premium level using the 2022 model. In this case, since this is for beginners, would kill the trade and take profits at the 9:30 a.m. low. You will have to put the stop at the swing high and it would give you a solid 1 to 2.25 risk reward. The next trade is a continuation of the move lower. We would enter at the consequent encroachment of the two bearish fair value gaps joined together, and will look to distribute our positions at the same low used for the previous setup. This trade gives a positive risk reward of 1 to 1.3. Well, this is the same trade but using a lower low to take profits. This is obviously a better trade, since it offers a solid 1 to 2 risk reward ratio. This is our final trade, the last fair value gap used to raid the hourly sell-side liquidity pool. And it offers a 1 to 1.2 RR. Finally, the same trade but entering on the consequent encroachment of the fair value gap. With this, you get a better risk-reward ratio, but you are risking not getting an entry. So you will have to decide if you prefer to not miss the move or to get a better entry. Well, you have made it to the end of the video. If you are here, I want to thank you for watching. Not many people make the effort to watch a video and try to learn something from it, so you are on the right path. Once again, thank you and don't forget to subscribe and like the video. See you on the next one. Be safe.